for number 5, Becky C is a single taxpayer and owns 2 properties with an aggregate loss of $50,000. Becky actively participates in both rental properties. Becky's modified adjusted gross income for the year is $95,000. What is the maximum amount of loss that Becky can deduct during the year? And question part B, would your answer change if her modified adjusted gross income is $170,000? So we got 2 different fact patterns. Modified adjusted gross income $95,000 and modified adjusted gross income $170,000. Total rental loss $50,000.
But she was actively participating, so she can deduct all of it, right?
For which category? Again, there's
for the $95,000.
Part 1.
For part 1.
We got AGI of
$95,000.
$95,000. The maximum loss allowed. Well, you're actually close. It's not all of it. Because
you can do $25,000.
Up to $25,000.
Up to $25,000.
Up to $25,000.
But what if she was actively? Isn't there an exception where the real estate thing?
We'll get there.
Okay.
There is an exception.
Oh, that's
the
for
real
the
estate
second
thing.
part.
Well, actually, this ties into both parts.
But it can work for both.
It can work for both. You're right. It can work for both. You must have read my mind. I was going to actually go there once I explained both of these. You must have ESPN.
No, she just got a lot of sugar in her blood.
it could be. All right, let's focus, guys. Focus. So for the first.
How did you know?
For the first one, the most they can deduct is $25,000. So again, the maximum amount loss that you can deduct on the part 1, $25,000. There's a $25,000 carryover. So again, the total loss was $50,000, and there's a $25,000 carryover until next year. Again, for part 2, for part B, depending on how you look at it, there is modified adjusted gross income $175,000. Maximum amount loss allowed. Any answer for this one?
Well,
just on these facts, these facts given.
On these facts given, they're saying that she was actively participating in it.
We're not there yet.
We are. We're on part 2.
We're not. I know what you're trying to ask, but yeah, he's right. We're not there yet.
But
What's the maximum amount of loss we can deduct right now? Zero. Zero.
Because the AGI is over 150.
Yeah, because the adjusted gross income, the modified adjusted gross income is over $150,000. Again, it starts phasing out at $100,000. It completely phases out at $150,000. Then it gets carried over until next year.
I have a question.
We'll get to the real estate professional.
That's not
next.
where I was. I was going to ask you, what's the difference between adjusted gross income and a modified adjusted gross income?
Well, adjusted gross income, that's the basic adjusted gross income. Gross income minus deductions for AGI equals adjusted gross income.
Right.
That's it.
The modified?
Modified adjusted gross income, it depends on what you're asking. Modified adjusted gross income for this is pretty much anything except this loss. Modified adjusted gross income for other items is different. I'll give you an example. For modified adjusted gross income for Social Security benefits, to determine the taxability of Social Security benefit is different. We actually start out with adjusted gross income. We add back half of Social Security benefits, and then we add back a couple non-taxable items. That equals modified adjusted gross income for Social Security benefits.
Oh.
So again, for each different category, each different deduction, we compute modified adjusted gross income differently. For right now, it's simple. For this, at least what we're trying to go over right now, it's everything except for this loss. So your AGI is your modified adjusted gross income. In this case. In most cases that deal with these type of problems, it's going to be the same. There are some exceptions to that. But for right now, it's Maggie equals your adjusted gross income. All right, so now, the next question that Dee was trying to ask me, something about a real estate professional thing. So maybe I should have put that as part C. Would your answer to part 1 and part 2 change if real estate pro? So let's do max loss allowed for each one. So let's do the first one. Real estate professional. What would be the maximum amount of loss that you'll be able to deduct for a real estate professional?
50 grand.
50,000. Again, AGI 95,000. You deduct the first, all of it, 50,000. What about part two?
Also.
Also 50,000. If you're a real estate professional, you're not subject to the Maggie rules, the phase-out rules. Again, if you're a real estate professional, you'll be able to deduct the total loss, and you're not subject to the Maggie limitation. So it is $50,000. There is no carryover. But refresh my memory. I know there's a criteria, there are requirements in order to be a real estate professional.
You have to be actively participant.
Actually, not actively participating.
50%.
Right.
Material participation.
Material.
On the real
Isn't
estate
it the same
professional,
thing? Active-
it's not the same
No?
thing.
Okay.
It is not the same thing. Material participation, those are strict requirements. That's under the Treasury Regulation 1.469-5T. And there's 7 tests right there. Those tests are specific. Actively participation is different. All you got to do is just meet tenants, and there's no strict hour requirement. You may remember in the rules under the material participation under the Treasury Regulation I just cited, we have a 100-hour rule. We have a 500-hour rule. If you put more services than anybody else, there's all these criteria under all these tests, under those 7
Those
tests.
are material.
Under material participation, there's conditions. So rule number 1, to be a real estate professional, you got to materially participate. Rule number 2, that it has to be met, or condition number 2, I should say, that has to be met. More than 50% of your services have to be in real estate. So that's one of the reasons why individuals that work full-time for something other than real estate, is very, very difficult to meet that criteria. Think about it. Let's say you work 2,000 hours in one job full-time, you would have to work 2,001 hours in real estate activity.
Yeah.
Very hard to do. You don't have any time to sleep.
You can't have no children.
You can't have any kids, you can't have a girlfriend, you can't have a boyfriend, you can't have a social life, you can't watch
When you're working
football.
40 hours, it's
can't
hard to
sleep.
have a
You
kid.
can't even sleep.
Can't sleep when you
You
work
can
40
barely
hours.
eat, breakfast, lunch, and dinner. So it doesn't work. So again, first 2 conditions that must be met: material participation. More than 50% of services are in real estate, and the last one, more than 750 hours on our real estate. So again, these are the conditions that must be met to be a real estate professional. Material participation, more than 50% of services are in real estate, and more than 750 hours are in real estate. Again, you have to meet those tests to be considered a real estate professional for tax purposes. So that's for question number 5 on passive activity losses.